Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, joined by Joel Elconin. Dennis Dick is around today. He'll be in and out with us throughout the hour of the show, but we got a lot to get to. Biggest story, of course, is I guess they're changing the name, Joel, of Red Hat to Big Blue Hat or Purple Hat. I'll be here. I'll be here all week with that.
Brent had one from an analyst.
Yeah, it was
Purple Haze.
Purple Haze.
I have to go that with go with
Okay.
that from Jimi Hendrix.
Okay. All right. Well, of course, the IBM acquisition of Red Hat is what we're going to talk about this morning. That's our top story of the day that's causing a lot of movement in tech and just the market in general here. So we're going to talk about that. We're going to talk about sympathy plays from that acquisition. We have a couple other things to discuss. Shipping stocks as well. We're going to talk some macro with our guest, Chris Temple at 8:35 of the National Investor. So a lot to get to. But first, let's run through some levels in the S&Ps. Joel, what's doing today?
Oh, big old range overnight. Pre-market low at 26.60. That was just below the after-hours close at 62 and a quarter. Your pre-market high comes in at 2,700.75. Not much up there, just that psychological $2,700 level. Thursday's high way up at 23.75. Not sure if we will get that high today. Looking at the crude oil market, crude's flat here. Found some support at 66, but really hasn't been able to punch into the 68 handle. Double top, potential double top right under 68. Your last two highs are Friday's high 67.88, current high 67.95. Gold peeling back a little bit, down 420 at 1231.50. Still holding over that breakout 1220 level. Silver not moving much, down 2.5 cents here at 14.675, and Bitcoin leaking a little bit here, inching closer to 6,000, down $80 at 6,320.
All right, so Joel, let's talk about this acquisition. I guess it broke when Saturday night, Sunday morning, sometime in that span. But IBM is making the biggest acquisition in its company's history. They are acquiring Red Hat for $190 per share in cash. That is a big premium for RHT. I'll pull up the chart here, and not one that we saw coming.
Who knew about the cloud computing? That's they're waking up there at IBM to cloud computing software. Boy, oh boy. I mean, late to the game and paying a big premium here.
Big premium.
Yeah, big premium. And first of all, 190 is the takeout price. And that's in cash and debt. I don't know who would be financing that debt. I certainly wouldn't be doing it. Trading up $60 here at 176.90. Haven't been able really to get over 180. So like the ARBs are taking a look at this and they're saying they don't care about that takeout price. Likely not another suitor to come in at this huge premium. We did get up to 179.88. So 180 is your resistance, just hanging out here. IBM destroyed on this. You didn't even think you could get like a pop. They came in to hit this right at 4 a.m. Went down to 115.20 though on the recovery trail. Pre-market high coming in at 122.65. Just a terrible looking chart in IBM here. To get up to yesterday's low, 123.71. Yesterday's close, 124.79. But this is a big surprise. A big premium in this kind of market. No wonder IBM is getting pounded here. But should we take a look at some potential sympathy?
Well, yeah,
plays
you can go across the board here. You can look at Adobe, you can look at Salesforce, Autodesk, Fortinet, Splunk, Shopify. So let's start with Adobe first. But there's really a ton of you could say it's moving the whole the whole damn market this morning, but specifically the cloud computing stocks.
It's just kind of what the market needed. I think Dennis mentioned that on the pre-market show that, hey, you're getting a sector, your semi, chip sector, been in the doghouse. Now you get an acquisition that stokes, feelings there may be similar takeovers. You got Adobe. You got Adobe trading up 6 sticks here, but this one's kind of interesting on the 15-minute chart here. Seems like someone wants out of stock at 252, 251.99, 252 has been the high since 715. On the dailies, not much there. Friday's high right in that area. After that, you get a $1.50 leap to 53.59 and 54.60. But first things first, taking out the pre-market high. What else do we got for potential sympathy plays?
Oh, we can go. Let's go to Workday.
Okay. Workday trading up $4. Just folks, this stuff is trading up like $4.35 on 433 shares. So they're pumping it up here. There is overhead supply. This one, I'm not even going to look at the pre-market trading. I'm just going to go to your charts. I'm going to tell you, keep an eye, 125.07, right where we're trading was Friday's high. Your 2-day high, 126.80. So we'll keep an eye on that one.
Oh, we can go down the list here. What about, you can look at, we looked at Workday, we looked at Adobe. What about Splunk here, SPLK?
SPLK. Boom, boom. Trading up here, $4.09.
They're all trading up $4.
They're all trading. I know. That's what I said they're all trading up $4. Tricky charts here. I mean, a big old monthly red bar. I mean, I guess if you really want to get excited on these moves, I mean, I don't think there's any chance that these things are going to do like a 50% retracement. So this one ticked up to 96 on very, very light volume. Oh, I got a level I like here. If we go and continue into rally mode here, a trio of highs at 97.50, and this was from Monday, Tuesday, and Wednesday last week. But man, oh man, that's still $3.50 away.
I'm trying to think, Joel. I can't even remember when's the last time we had a big acquisition like this that didn't involve like cannabis stuff. I'm trying to. I don't.
We've had some acquisitions in the
or slash big investments. I can't remember. This is big, and I don't remember the last. It seems like it's been a few months at least since we had an acquisition of this size.
How does this rank up there with? I guess there wasn't a huge market cap right on the Red Hat, so this doesn't like. Rank up there as one of those monster deals or anything.
I think of like paying big premium, and the first thing I think of is Microsoft buying a LinkedIn for like a 70.
That was like
80% premium for what they paid for that. But it just seems like it hasn't been a super active M&A market for like the big. The top tier deals. This is a big deal.
It's a huge deal, especially for a stock that's just been in a perennial doghouse. They've been buying back stocks since what's the all-time high in this thing? This thing is relative performance. It climbed over $200. Did we get over 200? No, I know this thing's been higher than 200. Oh yeah, this thing peaked in 2012. I'm referring to IBM here at 216.90. So when the market's gone up 30, 40, 50%, this stock has had a 2-for-1 stock split while they've been out there buying stock. I will go to the monthlies here in IBM, and I will tell you there's a particular area of interest here. 116.90 to 118 even. If you happen to go in reverse again today, those were some monthly lows from January and February of 2016. And, also another takeaway from this one, when Mr. Buffett gets out of a stock long-term and Dennis gets out of it long-term, I think you got one hell of a, I know Dennis was trying to buy this at the beginning of the year and he took his lump on it. So, man, oh man, we'll see if it could, recover today. But longer term, I'd like that 117.50 area.
Just speaking of fundamental here, you have to question, gosh, like they can't go organically? What they have to go through acquisitions?
I mean, they've had good numbers, but they haven't been happy with the revenue growth. They want to grow. I mean, I got a quote here.
Like they're IBM. Like you would think they they'd be able to do this without having to buy someone for $34 billion.
Sean Udall said, wow, so many better things for them to buy for that much money. He compared it to the HBQ buy of autonomy, but almost as bad as when Hewlett Packard bought Compaq at like the top of the market. So I don't know. Maybe I think I saw a quote from Gina Romedy or Romedy. It's like a high, now they're going to be like a hybrid cloud. I don't know. I mean, maybe it's going to take a few years to grow into this deal. It's definitely be keeping an eye on IBM. Let's cover a few more here.
Yeah, well, someone in the chat just threw out TTD. So let's look at the trade desk.
That's trading up $3.19 here, 113.50. Let's see here. Haven't even taken out Friday's high in that one. Keep an eye on 114. Above 114 here, things really open up to 118.63. I mean, the thing is these charts just look so horrible. Each one of these stocks that I'm pulling up has been such a tech wreck. I don't know what that one, with the highest short interest or whatever, but man, you just know when stocks get killed like this, that they, this is good news and everything, but to turn them around, technically, maybe this is the catalyst, and maybe those lows that we put in on Friday will be the lows for quite some time here. But 114, I'm keeping an eye on the trade desk. What else are our chatters looking at today?
HDP.
Now they're an Evolve. They did like a merger or something.
Yeah,
right?
Yeah.
Trading up $1.02 here. That was a big fade after that news came. They gapped up to nearly $26 and has been coming in here. We're keeping an eye. We broke above a double top from Thursday and Friday, 1750. Our next target here is 1860. That splits three highs that you had from Monday, Tuesday, and Wednesday of last week.
And Dennis wants you to look at Cloudera.
Cloudera. How do you know that? Did he message you?
He put in the chat.
Oh, Cloudera. Oh, man. Recovered. Man, just got hit with the rest of the market. I mean, this one I could see. I mean, you have a pair of highs at 1352, 1359. So you are breaking above that area. And this one trades pretty technically. Above that, you got room, another buck here to the 1450 area. Last week's high at 15 even. So let's see if our Cloudera could get a little boost from this.
So, Joel, we're trading up here this morning. Is this going to be the thing that brings us back all the way?
All the way?
No. Not all the way.
No.
Okay.
I remember last week when I was talking with Dennis and we had that one up day and I said, it just wasn't a healthy rally.
It doesn't feel healthy.
I mean, I would much rather see us chop around for like 2 or 3 days and the bulls and the bears square off a little bit. Cause now, we're going to go into a decline at some point.
Mm-hmm.
I just don't think, the value buyers, the big institutions, I don't think they're just going to step up on one IBM Red Hat merger here. So it's going to be a two-sided market. I mean, we're trading near the highs of the pre-market session, getting back above 2,700. Very important. Big old range last week. Last week's high was way up at 2782. We didn't make that on Monday. Actually, in the weekly low was 26, 27 and a quarter. So we had a 150 odd point range. It's a big range in the S&Ps. I mean, can we figure a 50% retracement yet here? Maybe that 26, 27 and a quarter low from Friday. That was basically a 300 point move down, up 150. That would take you up to 2770. But I just don't think this is enough just to totally turn it around. I would rather see us back and fill a little bit today, find some buyers underneath the market, because all the people that, bought the dip all last week and took a lot of pain, they're seeing a lot of green on the screen this morning. And if, for these short to intermediate traders, this is a dream. I'm sure they'll be booking some profits here today.
And then a question from the YouTube chat: wouldn't Amazon be a sympathy play? Well, yes, but they're a little bit too diversified to move on. We can look at Amazon right now. I haven't looked at them this morning. They're not moving yet, are they? Really? Or maybe we just look at the rest of the market. But yeah,
actually, 53,000 shares here for Amazon.
Okay.
let's see. I mean, let's take a look at that one. It had made the low of the move on Friday, coming back up, big candle. What was the high on Friday? The high on Friday was what, 1698.46. Wow. So we're still $30 away from that. So 1700, call it resistance there. But the way this stock moves around, and like Dennis says, I don't know if someone was mentioning Amazon as a potential takeout, but they're a big old company. No one has the dollars, to pay up.
And they have so many businesses that it's hard.
Yeah.
It's hard for them to move on an M&A. The cloud is a big part, but it is just one part of the business. But this does sort of remake the entire cloud computing sector. So we'll have to see what kind of thoughts.
Well, how's it remake it? I mean, if people are going to look at it like IBM is getting into it now, so it could potentially be the top. I mean,
this is not the top in cloud computing. Cloud computing is a core technology of our future as we become more connected in the Internet of Things. But I don't know.
Spencer's showing a little bit of that University of Maryland computer science degree there.
Please. Please. All right. Let's look at some different sectors this morning. The shippers. They're talking about them in the chat, and they're moving, and we don't know why. So first, I guess I'll pull up dry ships, DRYS. These things, there's a few of these names, and they all tend to move in sympathy with each other. Tops, DCIX, dry ships, ship. Don't know what the news is. Don't know if there is news. Don't know if there even has to be news here. But let's look at the chart.
Okay. Well, here we go. Here's the theory that Luke and I came up with.
Okay.
Or I would say Luke came up with this. Over the weekend, right? There's not as much news and information out there, right? So if you want to pump something, through the social media, what's easier than to pump these shipping stocks, right? The way they move around, they're pretty thin. So you had this exact same scenario last Monday. DCIX spiked to 213, traded down to 152 during the day and closed at 157. And if you look at the charts on all these, well, it was up on Friday night, but you get the news going. All these did the exact same thing. They had a pop on Monday, and it was a fade. Will it be the same scenario today? I don't know. It looks like some pretty good volume here trading, but just keep an eye on your highs from last week in this one and see if they, for example, 213 was the high in DCIX. We're trading above that at 233. But keep your eye on your pre-markets highs. The high for DCIX is 277. So we have backed off 40 cents from that. TOPS is trading up 41 cents at 207. Last Monday, spiked to 270, backed off, ended the week at 166. Dry ships, DRYS, that is trading up as well. It's only trading up, 4.5% here, a little bit of lagger at 506. Last Monday, dry ships spiked to 584 and ended the week at 484. And then, EDRS was another one that we mentioned on the pre-market show. EDR, is it EDR? EDRY. EDRY. Last Monday, that spiked up to 13 even. We're currently trading at 13 even. So showing the most relative strength out of all these is Eurodry Limited. And man, oh man, this is a thin one, folks. 31,000 shares traded on Friday, 60,000 shares traded on Thursday. So don't be, if you're going into size in this one, just be careful here. Not a lot of volume in ED.
I was going to say, this isn't even a technical trade because these charts don't really make sense. So
with all the reverse splits and everything.
Right. But also just there's no news. So, okay, you think technicals, but there's no like rhyme or reason to it smells pumpy to me. You know what I mean? But because there's no, not that I have my MACD or whatever, my indicators up on my screen right now, but like this seems random.
Doesn't matter though.
I guess not.
Does it matter? I mean, if you short this thing, are you thinking, well, this is just, I mean, if you short, you have to cover. These are just simply trading vehicles that move around and they're very subject to news. And these are, if you're take another quote from Dennis here. If you're good trading these kind of stocks on this kind of news, stick with it. If you think this is a way to hop in for the first time and get rich buying dry ships, well, then maybe you should think about something else.
And then someone's bringing up a good point in the chat. I believe it's Dry Ships is the one that has earnings after the close today.
Oh,
So,
you talk
yes.
about the most horrific. Let's see. I'm going to bring up earnings in this thing. I mean, even with the reverse splits and the what do they call it? Death spiral financing, I think is the fancy word that they like to use for it. Let's see here. Dry Ships. I mean, there's no one can even estimate on this thing. I don't even know what it has after the close. There's no estimate. I see one quarter here where they lost $37. I see another. I mean, these numbers just don't mean anything. I mean, some kind of maybe look for. They don't even have an estimated revenue number.
Yeah.
The last time they had an estimated revenue was from Q4 of 2016 at 48 million.
Yeah, these shippers are so thin in terms of liquidity, but also thin in terms of news and coverage in general. So just
Don't we have a trade war going on? Is no one going to be shipping stuff anymore? We're just going to become a self-sufficient country because we're not going to trade with China or get anything like that. We don't need shipping anymore. So
I forgot about the trade war.
Yeah.
It's been a minute. All right. It is 8:22. We've covered some stuff, but I want to also go to Brazil here because I was a little bit surprised to see the Brazilian equities trading up this morning. The election, which was not expected to be a surprise result, and it was not. Jair Bolsonaro, the far right candidate there, won as he was expected to win, and then you're seeing that the trade sort of, follow through this morning. BRZU is an ETF that's trading up. PBR is the big, one of those few big companies that we follow here, and they're also trading up this morning on news that wasn't really a surprise.
Charts were good. Who was talking about this in the chat on Friday? Someone was saying, look at that chart on EWZ. They asked me to take a look at it, and I was thinking, man, it's breaking out over $40 here. They had several highs in that area. You did break out. I'll just give you your pre-market high in this one, 42.59. You're not trading the primary market in this one. Let's see here. I got a monthly high. Got a monthly high at 42.05 as well. So important for EWZ here to remain in the $42 handle. Yesterday's close way down at 40.04. So Brazil getting a little bit of a bounce today.
Surprising. This is one that I would have thought they would sell in news, but I guess that's why I'm not a market maker or anything like that. All right. You want to go to some earnings today, Joel?
There's some earnings today. Tomorrow's the big day.
Tomorrow's a big day, and we can always preview the ones reporting tomorrow. But I think we had one this morning that I wrote on my list. Let me find it here. We had a couple. We had Bloomin' Brands and we had Booz Allen Hamilton. So let's go to BAH here. They reported a Q2 EPS of 68 cents versus a 60-cent estimate, sales of 1.61 versus 1.64 billion dollars. So a slight miss on the sales and a beat on the EPS. They're raising their fiscal year EPS guidance from 235 on the low end of the range to 255. So a 20-cent EPS guidance raise for the fiscal year and earnings beat for BAH.
All right, no one's making a move in BAH as of yet. No trades in the pre-market here. Let's take a look at this one. Made the low of the move yesterday, on Friday, closed near there. 46.82 is your close. So if you think that's good earnings here, you want to lean on that low of the move. This one has not really, made an all-time high at 52.56. This was in September, and back still around $47. So this one still relatively close to its all-time high. Not sure if this is good enough earnings support to bring it right back up. Friday's high at 47.41, a big hurdle to clear there. 2-day high at 47.98.
And our big loser of the morning is an earnings play, Tower Semiconductor, TSEM, Q3 EPS 37 cents versus a 40-cent estimate, sales of 322.5 versus $335 million. So miss on both the EPS and sales for TSEM, and it's down. Last I saw 15% or so.
And 15% at 14.92, just skimming along the lows of the pre-market session. Looks like we may have some more sellers in here. 1483 is your pre-market low. Street leaning the right way into this one. The stock over $22 at the beginning of the month, now trading under $15. Going out to your monthlies here. Let's see. 15 is an area of interest to me. The reason for that being you had 2 monthly lows, one at 1483 and one at 1504 back in September and October. So, but believe me, man, looking at some of these monthly lows and when some of these stocks get going in one direction, when a seller comes in there, just let's say they want out big time. They don't care about the monthly lows. They're going to sell their 500,000, 2 million shares until they find buyers in it. But 15 level of interest here for TSEM.
And somebody in the YouTube chat asking any idea why Red Hat is trading $14 below the acquisition price. Well, we see this every so often. Well,
yep.
It depends on the size of the deal, but generally speaking, there's going to be some people that come in there and keep it lower to price in the possibility of the deal not going through. So obviously every deal is subject to regulatory approval. There's no whispers. There's no immediate whispers that this could be
I don't see the regulatory issues on it.
There may not be, but you never know.
I mean, IBM shareholders may come in and say, what are you doing? I mean, I don't think that they're going to, it's pretty much a done deal. I think also in this, the ARBs just, they don't want to take the risk here for the extra, $13 or so that the deal falls apart. They have cash. They're doing some financing. You never know what happens if the financing doesn't fall in line. I think the street's reasonably confident that no one's going to come in and top this 190 bid.
Right.
Sometimes when you see it trading over the takeout price, and then also, long-term owners of Red Hat here. Let's say you just started picking this stock up at $70, $75, $80 in 2017. You had a price target, you hit the all-time high at 177. This is kind of interesting. It's not even making the new all-time high on this one. 177.70. You did tick up to 180. So
from June?
Yeah. Yep. From June. So that's an interesting level. Also, if the deal's done, maybe they just want to take their money off the table and redeploy it, not going to leave the risk for another $13 when they can take their assets and put it somewhere else. So there's a couple possible reasons. And, to see when's this deal supposed to close?
Oh, I don't know.
Yeah, that would be another thing to see if that premium, the likelihood of someone coming in and topping this one, I don't see it. See what people want to do with their money ahead of this, and just a big windfall. It's saying this thing closed at 116.68.
Oh, back half of 2019.
Back half of 2019.
Yeah.
So that is a year away. If you want to.
So we got a year for who knows what.
Yeah, who knows what's going to happen? Wonder if IBM will be under $100 by then, but we'll see.
All right, 8:29 now. We got about 5 minutes before we're going to bring on our guest, Chris Temple from the National Investor. Joel, we had a lot of ratings today. The analysts have been quiet. It's been a volatile market, but they've come out in spades today. And I want to point out one in particular that I'm sure caught your eye, and that is Ford Motor Company getting an upgrade this morning from Goldman Sachs to buy, raising their price target. So this is their price they expect the stock to be at in 12 months. Their price target is now $12 and a buy rating on Ford from Goldman, the most influential of the analysts, arguably.
I think it just all started with Michigan beating Michigan State. That kind of had a little change of karma, because full disclosure, I do have a long position in Ford that I put on last week. And what more could you ask for? That you come in the morning and it's upgraded by Goldman Sachs. That is just a little bit of good luck, I would say, it all it is. Very strong on Friday. And what I noticed on Friday here, it had the biggest day in 8 years after earnings. Went from 18 to 8.99, and I was really worried that it might give some back on Friday. But man, the market was getting pounded, and this thing just stayed bid like the entire day. Showed excellent relative strength here. This is another big move for Ford. This is up 40 cents or 32 cents at 9:30. Hopefully it can hold these gains for the session, but 944, that would be a target for me on the upside. That was your October 1st high, bunch of highs at 950. So for this to need, to move another buck, you are getting Mr. Market helping you out a little bit. First things first, let's take out the pre-market high of 9.39, currently trading at 930. And same thing, relative strength in GM on Friday, but you have to look. Actually, this stock had good relative strength on Thursday and Friday. Made a new multi-year low at 30.56, ended the session at 32.65. Actually, 23 cents off the high of the session, trading up in the pre-market. 34 and a quarter is your pre-market high. Just be aware here, 34 even and 34 and 27 were highs from October 8th and 9th. FCAU is also getting a boost from this as well. That is clearing a pair of highs at 16. So if you want to come back and maybe buy this on a gap fill, Friday's close was 1602. And I guess you got to throw Tesla into the automotive sector here. Trading up 1090. How about that? Shrugging off the FBI news on Friday that it was coming in, and they sold that thing off hard and rallies right back, trading up 1090 at 341.89. Right at Friday's high. Friday's high was 339.90. So let's hold 340 here, and not much between 340. I see, go to your month or your dailies here. You can find some highs from August, 342, 345. Then a big old leap up to 359.20 for Tesla.
We'll do a couple more ratings before we go to our guests, and there's one that was brought up in the chat. They had earnings last week, and then as a proof point, we didn't cover the earnings, but they beat on the earnings, and they gave some good guidance, and they're catching a double upgrade here this morning. They're catching one from Goldman Sachs and one from KeyBank, both to buy/overweight. Price targets are 114 and 120 respectively, and this is for PFPT.
This chart you can call no man's land here. You had a gap down date on Friday, got absolutely killed, closed at 83.55, and now you're gapping into a gap. So I'm not even take any risk on these levels here. Fill the gap, 97.34. That was your low from Thursday. A lot of air in the market there. And coming back on the downside, if you're looking for a gap fill here, 85 even was the high from Friday, and 83.55 with the close. But they waited, got killed. They came back up with this. So a lot of air in this one, and traded decent volume here on Friday. So you got to think anybody buying this stock between 75.92 and 85 even, currently in the green by almost $2. So see if they come in for any profit taking in this one.
Here's one that's very interesting to me. Wedbush is upgrading Lennar this morning. We've talked a lot about the home builders on this show for the past couple of weeks and just sort of ground zero for interest rates. Lennar catching an upgrade to outperform and their price target. They actually lowered their price target down to 50 from 56, but still an outperform rating on it. Lennar, you don't see too many of those right now.
No, it's trading up 71 cents here, 42.50. Historically, these home builders on earnings have popped and kind of given it back. Don't have a great recall on how they've traded off upgrades and downgrades. Trading up pre-market high, 42.87. What do we got here on the dailies? Not much there. If you climb into the 43 handle, another 80 cents from here, you have a pair of highs at 43.34 and 43.36 from October 18th and 19th. And let's just get a quick look at the XHB. That one, new low of the move yesterday. I mean, if you want a longer, 32.59. This is not really getting a boost off this. So if you don't feel like playing, the leader with the upgrade, it looks like unless it's bid up in the pre-market, the ETF is flat on the session so far.
All right, we're going to take a quick break and grab our guest for the day. That is Chris Temple. He's editor of the National Investor. Good macro guy. He's got some specific names he's watching as well, but also great to just talk through just the macro environment we're in right now. So we'll be right back in a moment with Chris Temple. And welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elconin, now joined by Chris Temple, editor of the National Investor. Chris, how's it going this morning?
Great. Good morning, guys.
All right, Chris, it's been a while since we last spoke, and we're obviously in a bit of a volatile market right now. So give us your sort of top-down thoughts on where we stand right now, specifically in the U.S. markets.
Well, I think that this correction that we've had recently has pretty well run its course. I think that for a few reasons, there are risks in the near term, particularly election day and immediately thereafter to the upside. So that's one of the reasons why the end of last week, I told my subscribers to close out our remaining short positions, chiefly on emerging markets, because I think that we may get a little bit of an uplift here. I don't like what I see going forward for the broad markets into 2019 in some respects, but I do think there's still so much liquidity in the markets. You're going to start to see news of buybacks reemerge again after earnings season as we're winding that down. So I think that we're going to be choppy here. You can't be a super bull, you can't be a super bear, but understand that there's still a lot of liquidity in the markets. Understand that a lot of value areas are just absurdly cheap, and I've got a few names as far as some good value stocks, really in multiple sectors.
All right, we'll get to those names in a second here. So what has to happen then for that to change for you to get extremely bullish or extremely bearish?
Well, as far as extremely bullish is concerned, I think that you are setting up perhaps, and the odds are still a bit against this. You could have a replay on November 6th of what we had on election night 2 years ago, where when Trump won, you had the futures get annihilated briefly, and then all of a sudden everybody decided to rethink things, and the stock market took off and didn't look back for over a year until we got into early this year. The betting was decidedly against the Republicans keeping the House as we ended the summer. You're now up to about a 40% chance. The national polls now show that the Democrats nationally have a 50 to 47 lead over Republicans, which is the narrowest margin of the year and a statistical tie. And so I think that you have to at least be prepared. I'm not saying this is definitely going to happen, but at least be prepared for the Republicans not only keeping the Senate, which is a lock, the math is in their favor, but what if they win the House? You don't want to be short any risk assets if that happens.
All right, let's get to some of those value names you mentioned. We've been in rip-roaring bull market, not a great time for value names broadly speaking, but you have a couple that you want to throw our way.
Well, yeah, I think that what we've seen recently, especially with the FANG stocks, is something that I thought was supposed to happen earlier this year. It started and then we got away from it. You're seeing money come out of momentum names. Value, which got beat up ahead of that, I think is going to start to rebound. Energy is an area that I've looked at closely. I mean, oil has been all over the place. You could make a case for it to go up $15. You can make a case for it to drop $15 if the trade war gets worse rather than better near term. But you look at a stock like McDermott International, MDR on a New York Stock Exchange. They absorbed the old Chicago Bridge and Iron a short time ago. Great. I think in the end, it's going to be a great accretive deal for them. They've announced business, left and right all over the world this year. Their earnings are strong. That stock is selling for half its 52-week high. And if you look at energy service generally, even when oil was in the mid 70s, a lot of the energy stocks weren't keeping up. Now they've got doubly hit with this recent drop in oil. And if you believe that we're going to have at least a modest growth in this country going forward, and that things aren't going to get any worse and perhaps may get better globally where they've been weak, there's a lot of names in energy stocks and energy service like McDermott that are great. In the recent drop, look at the more conservative pipeline and midstream companies. You got Catalytes like Energy Products Partners, Kinder Morgan, they're 10%, give or take off their highs. Those are no brainers for conservative investors. So those are a few just in energy.
And something that we've been talking along those lines, though, is, when you see the price of oil go up and you don't see, a correlated stock like an SLB, for example, how can you feel confident in that?
Well, the reason I do, Spencer, is that one of the stories in the world, and earlier this year at the Daniel Yergin-led CIRA conference in Houston, he had the head of Saudi Aramco there, and they were talking about a lot of the looming lack of supply and productive capacity in the world that is just ahead of us. And going back a couple of years to when we had the oil price below $30, a lot of work got delayed, which always happens when you have a drop in price for any commodity. And going forward, global demand is now up for the first time in history to around 100 million barrels a day. We have robbed from the future with the shale industry and the fracking industry in this country. The rest of the world never kept up to begin with keeping its infrastructure and future production coming online. And almost regardless of what happens, and I didn't think this until this year, we're seeing a looming shortage of oil coming in another year or two. And I think as long as the price stays up to a halfway decent equilibrium level, you're going to see the industry forced to catch up at a faster pace with making sure that we have reserves that are ready to bring to market the next 1, 2, 3, 4 years. And that's going to favor the energy service stocks, some of them at least, that have been laggards for so long.
We're on the line with Chris Temple, editor and publisher of the National Investor. Chris, thanks for joining us this morning. I guess I got to go a little bit into IBM here, making because you're a veteran of the market here, and I've been a little bit cynical about this deal, and I just like to get another respected market veteran's evaluation of this deal, and it's making you just run out and just buy all the IBM that's available, or you just kind of sit back and wait and see how this scenario plays out?
Well, I'm cynical too, Joel, because they're paying what, 10 times revenues or something like that for Red Hat. They've got money burning a hole in their pocket. They're trying to fight back against the market believing they're too stodgy and they're yesterday's or a decade ago's news. But it does show one thing, I think, and that is there's still a lot of liquidity out there in corporate America. There's a lot of liquidity in the markets. And what I'm looking at are tech companies that I think for one reason or another are way too cheap and could themselves be takeover bait or just be choices for the market as we're looking for stuff that hasn't been picked over. Look at Symantec this year. Early in the year, there was worries that they had misreported earnings. They're going to have to go back and restate numbers. The company just came out, pretty much said it was much ado about nothing. You've got a stock that was in the low 30s. That's now 19 and change in the pre-market this morning. Good security company. And if they don't rebound in their own right, based on the fundamentals of the company, someone's going to take them out. One of my longtime favorites, which has started to wake up a little bit in the recent past, is one of the initial leaders in voice recognition, Nuance Communications, NUAN, on the NASDAQ. That stock has done fairly well this year, even though a lot of value plays have not. And I think here again, you've got a company that has finally gotten its act together at converting what used to be one-time deals, like a lot of software companies have had to do, to a subscription model. Nuance, I think, is a good fundamental story. Not great growth, but it's steady. and they've got technology that somebody else is going to want. So those are a couple of tech names that I like. I wouldn't have wanted to run out and buy either Red Hat or IBM specifically, but I think that that model is something with a lot of liquidity still out there that's going to be followed. There's going to be other deals.
All right, Tom, moving on here. Just got some news in the automotive sector. Ford upgrading, or Goldman Sachs upgrading Ford from a neutral to a buy here. Perennial laggards here during this rally. I think Ford hit a multi-year low. Are these Ford, GM here, FCAU? Are these some of the value stocks that are on your radar?
They're not on mine. I still think they could be value traps. I question how much oomph that there's going to be in car sales in the next year or two that's going to move the needle very much, because I do think we're going to see the overall economy slow down somewhat. I do think that there could be some relief coming, though, if you believe that sooner rather than later there's going to be a truce, at least in this trade war between the U.S. and China. That is going to be one of the pivotal things going forward.
Staying in the automotive sector, the trials and tribulations of Tesla, just very subject to the news. Trading up 1140 here, 342.30. Just a very volatile stock. Is this the future of the automotive industry in the United States and perhaps worldwide?
Eventually, but I think it's a little bit premature. I had a subscriber a while ago, Joel, asked me would I be long or short Tesla, and my response was, my dad, when I used to get into his tools as a little kid and think I was fixing something and I really didn't, he would always say to me, when you don't know what you're doing, don't do it. I'm not smart enough to know whether to short or go long Tesla. It's been fun story to watch, but I don't have enough sense to go either way.
Okay, let's move on. I know you've talked about some lithium plays here in the past on our show. So can we just do a quick review of some of the lithium stocks that you've been following?
Well, I'll tell you, the one that I loved, I recommended buying a company called Frontier Lithium. It's FL on the Toronto Exchange. They're also traded on the over-the-counter market in the U.S., and that is under the symbol, as soon as I find it here,
HLKMF.
Thank you, Spencer.
You're right.
And that we got into that stock about 10 cents a share early this year. It reached 80. I told people to sell about half of it. It's now down to 30. There has been an oversupply of lithium, according to Morgan Stanley, a big report they put out earlier this year. But it doesn't affect Frontier, because Frontier Lithium has got a beautiful deposit in northwestern Ontario. It is a technical grade of lithium that is for the ceramic and glass and specialty markets. I agree that it's too early to get back in aggressively into the brine deposits and things like that, where people are looking to lithium as a component of batteries for electric cars and things like that. But Frontier has got a lot of stuff coming. I love that little company. The guys who run that thing have done a wonderful job in building what is now about $1.5 billion deposit in the ground, and their market cap is a fraction of that. It's a great little company.
All right, let's move on here. Just the whole interest rate environment here. They're supposed to be great for banks. Financials have not traded that well since with the rising interest rates this year, where your home builders and your autos have gotten hit. Just any comments on the big banks and the financial sector?
I don't think it's going to get any better, Joel. I believe that the odds are extremely high that we have already seen the peak in long-term interest rates, are very near that. All of a sudden last week, and I talk about this in my current issue coming out today, you've got the first couple of cracks late last week in the Fed's hawkish resolve. Comments by both the new Vice Chairman Cloudera and by Loretta Mester on Friday, who's the head of the Cleveland Fed, to where, and I was telling people all year long, take Powell seriously. He is very serious about this. He has more than once expressed his view that he does not want to preside over the third episode of financial market imbalances undermining everything, as we saw in 2000 and in 2008. And he is very determined to wring out, for as long as the markets let him get away with it, as much of the excess from QE and ZERP as he can. But they're doing a lot of damage to emerging markets. The strong dollar has annihilated commodities. It's causing all kinds of stress. And I think that finally we're going to see early in the year, the Fed have some reason to at least pause. And if that were coupled by President Trump and President Xi at the coming G20 meeting in Argentina, having at least a truce, you're going to see the dollar sell off, and you're going to see a rocket ship for commodities, base metals, and energy that have been beaten half to death this year.
All right, that's a good note to leave us on. Chris Temple has been on with us. He's the editor and publisher of the National Investor. Chris, thanks so much for the time this morning.
Always a pleasure, guys. Take care.
All right, Joel, what's doing in the S&Ps before we
we're just creeping.
Names?
We're creeping higher here. We're up 28 and a quarter handles here at 29, 26, 97 point. We'll call it up 28 at 97.50. You're just off your pre-market high of 0075, and I'm trying to think here. Let me go to my dailies real quick here in the S&Ps, and boom, there's nothing in here, folks. 27.23.75 was Thursday's high. Let's see if we did anything on an intraday basis to give you a little bit different. Nope. 27.23.75. I mean, that's a big target here based on the 9-day average trading range, which is up to 55. That would take you up to 27.15. That's still 15 handles away, but you know how the momentum can get going in this market. If we go into the back and fill kind of mode here, boy, you need to get all the way down to 26.80.50 for mid-range.
All right, we have a Dennis Dick sighting here. He's crawling out from under his hole in his basement.
Oh, look at me. Look how rough I look.
Let's see how bad
no sleep is called. The hair is a mess. I'm in a t-shirt. It's been a long night. I got up at 3:30. Basically been trading since then because we know the equity is open at 4, and it's been a wild ride. I was on the wrong side of that IBM stuff because just not short red hat, thank goodness, but I had a little bit of IBM long on an overnight trade, and I was like, that's gonna go down hard. I actually came in trying to sell at 4 o'clock. I got out of a piece at 121.80, sold the rest of it lower, and now it's actually rallied back a little bit now at 119.98. So my average sell, I think, is in the 119, so right around where it is. But I knew when that, I saw that, I was like, man, they're going to knock 5-10 points off that for fun. And they did knock 10 off. It's come back because the market's rallied so wickedly here, but it was a massive overpay. So just bad luck to have it long overnight. I don't even remember the last time I had a long IBM overnight, but it was my overnight portfolio, and I was like, vomit when I see that.
So
but
you
anyway,
you automatically like that. I mean, I know we were texting yesterday. Did you see the news before I texted you, or
no, you texted me and then I went and looked because it's a Sunday, the middle of the day, I'm, playing with my kids, and then I was trying to think. I got 60, 65 positions. I was like, did I have IBM?
You knew it right away. I
can't remember if I had it in my overnight portfolio. I was like, I seem to remember having it because I traded Friday night. And then I went and looked at my positions just, a few minutes later, I just logged in and looked at my positions like, I do. I had a little bit of, not a huge position, but an average size position for my overnight. So I'm like, well, that's going to, hurt my day pretty good. And it is. And I'm going to have trouble recovering from that because when you got one position down 5% in your face, I mean, it's tough.
You automatically knew you were getting out. You didn't think, maybe I'll try and buy another 200,
oh, never,
300.
Never.
No,
because I'm in it for I'm doing the arbitrage. I'm basically doing the index versus the stocks. But I'm doing it on a smaller scale. So sometimes, if you have all 500, you're okay. But when you only got 50 and, it's some of the big components and a couple of them are big, and a big mover, it can hit you. So no, never add to a loser. Not in my overnight portfolio. Never, ever. Cardinal sin. I've done obviously that in my investment portfolio. In the overnight portfolio, my day trading portfolio, I never add to a loser. Like in 20 years, you're not going to see me adding to losers. And that's just because that's the first thing, you get taught back when you're day trading. You don't add to losers. So I try to work out of it as best I can. And that's what I did. I came in accepting that I was probably going to lose 5 to 10 points. And if I could lose anything less than 5 points, that's, just my own analysis of it. I was like, that's what I figured they would knock off the stock. Then that's good. So when I was able to get out a little bit of 4 in the morning, the 121 handle, if I could have got out of it all, I could have, but it was like 3 points wide. It's thin. I would have sold everything on the 121 handle. It quickly went down to 116. Bounced back a little bit there, and obviously, like I averaged out on all of my positions in the 119s, which is right about where it is right now. But That's just trading. I do a lot of different styles, and obviously I say I've always got the three hats on. I've got the investor hat, I've got the swing trading hat, and I always have my day trading overnight hat on. And that was in my overnight portfolio, so I got to get out of it. It's not a long-term investment.
All right, how about this?
And I hate it long-term. I've talked about that's why it sucks when it hits you on the overnight one when you actually don't like the stock. I've called it the GE of the tech world.
Speaking of GE, John Inch was on our show on Friday talking about the earnings potential dividend cut here. You get any interest here? We came back down, filled the gap. The low of the move was 11.21. You went down to 11.17, bounced, closed at 11.30 here. I don't know, just too much guessing here ahead of the earnings reports. Any thoughts on GE?
I mean, it's the whole, you bounced at the old lows. It's the only thing good for it is that you got down 11.17, and that's, the 11.22, 11, what are we looking at? 11.21, all those 3-4 lows from before in September. We bounced there, but no, I don't like the stock at all. And I think I agree with Inch. I think it's going under $10 eventually. I've been saying that on the show for a long time. When I sold my long-term investment up at 14 or 15, remember I started selling at 17. I sold the rest of it like 14. I'm holding some for 20 years. I'm finally dumping. It means I've given up on it. So I don't have, I'm not in the hope trade on it anymore, and I'm out. So I think GE is going under $10 eventually. I think all rallies are to be sold. Just my opinion. But dog's a dog, and I don't think the CEO is going to change things there.
That report is tomorrow morning. And remember, we had John Inch on the show on Friday. He was the one that told everyone to sell GE in May of last year. And he said he'd be surprised if they didn't cut their dividend tomorrow. So we'll find out if he was right tomorrow morning before or during our show. But that'll be one I'm watching on just based on what he said. He seemed very confident in himself.
So we only got about 3 minutes left. Let's go talk the overall market.
Question
with that. Where do I see it going? I'm just giving my thoughts here. I mean, it's the fade trade. The fade trade is still on. Look at this trading action. Yes, the trend is down. So, rips, you want to sell more than buy in dips. But I mean, you look at this and, 5 days ago, you had a pretty good up day, a pretty good bounce back. Then you had a big red candle the next day. Then you had a green candle. Then you had a red candle. Now it looks like you're getting a green candle again. I mean, it's just the fade. You're fading the moves. We go up 500, you're selling short, you're making money. Go down 500, you're buying, you seem to be making money. I don't know when that trade ends, but right now I'll tell you, if you're like, a momentum trader, those guys are getting chopped up. It is a contrarian market right now, where if you're fading the moves, you're making money. I had my best week, I think, of the year last week. This week's going to start a little rougher because of the IBM, but I'll probably bounce back. I'm pretty consistent there. I'm starting in the hole a little bit there, but we'll see how that goes. But, I'm primarily, well, I don't want to say I'm a contrarian. I kind of, switch the hat every once in a while. But, we've been identifying this for a few weeks, a contrarian markets. The fade trade has been back in. You can read my Twitter account. I've been talking about the fade trade. It's been working very, very well. Stocks go up 5-10%, selling them short. Stocks go down 5-10%. Buying them. That's like in the the day trading stuff, just oscillating around. From a swing trading perspective, I don't have anything on right now.
Too hard, too loose.
It's too my swing trades are more momentum plays and stuff. That stuff's not working. So I've got overnights where I'm fading stocks and fading moves, and it's working. That will eventually stop working again. Then you got to start switching it up and switching the script. But right now, fade trade is fully on. So when we're up and this is IBM driven, I believe it is. And you've got a lot of the stocks you guys talked about on the show earlier, getting a good bounce. Some of these cloud stocks are going to get a good bounce. And this helps. It does help the market as well. Does it change everything? I don't know yet. Trend is still down. There's still a lot of things this market was worried about. Let's see how we respond. Can we hold these gains today, or do we start leaking them? It's a lot of questions to be answered. But on the crystal ball, where is the market going, for a month? I have no idea. I just tell you, it's been making money to fade moves, and I'm going to continue to fade until it doesn't work anymore.
All right, imbalances. I mean, are you seeing just a slew of buying imbalances?
No, nothing. Because you know why? If you're an institution, let me just explain this. This is why the imbalances are really small lately. If you're an institution and you've got a big order, or you've got some stock to work, you're not showing your hand at 8:30 or 8:45 or 8:50 in the morning. You are keeping that order tight to your vest because your order will impact everything. It will impact the entire market in that stock because you're a big fish. So they are hiding, and they always hide to a certain extent, but they got to hide a lot more right now because a big order comes in and all of a sudden, stock can really move. So if you're showing, big size in the on the open to buy, they're going to be buying that ahead of you. You're going to pay up. So they're holding those orders very tight. So it's not surprising, even though we see this huge update here, it's not surprising that we don't see a lot of big imbalances. Ford, 400,000 to buy. That's made up of a lot of other traders, obviously, that are playing off the Goldman Sachs upgrade. Square, 48,000 to buy. Full disclosure, I'm long some Square in the overnight portfolio. I see AT&T 237,000 to buy. That's interesting because AT&T had a really rough day. That might be one I might be interested in fading, although it's been down so much so fast in the last 4 days that is probably due for a bounce. And obviously the overall market is bouncing here too. I see Twitter with 65,000 to sell actually, but again, it's so early. These are probably going to switch to buy imbalances there. So it's chop. It's going to continue to remain chop. I'm probably going to get less sleep because of that. VIX at 22. I'm working twice as hard as I am when the VIX is at 12.
All right, that'll do it for our show today. So thanks to everyone who joined us in our chats on premarket.benzinga.com and youtube.com/BenzingaTV. Thanks to our guest, Chris Temple. Want to remind you folks about the Benzinga FinTech Summit that's 2 weeks away. If you're out on the left coast, check out bzsummit.com to learn more about our conference in San Francisco on the 14th, featuring the biggest names in the brokerage and payment space. To get 80% off your ticket, go to bzsummit.com, enter the promo code PMP VIP, as in pre-market prep, very important person, PMP VIP, to bzsummit.com for 80% off. And then for our news traders out there, I have an offer good till the end of the month, which is like in 2 days now. So if you go to pro.benzinga.com, enter the promo code AMPRO, Alpha Mary Papa Romeo October, you'll get 25% off your Benzinga Pro subscription. That gets you access to real-time SEC filings, news, break news headlines, audio squawk, chat room, and a whole lot more than that. So check out pro.benzinga.com for that. Please remember that all the information on our show is for informational purposes only and not meant to be investing advice. And on that note, I hope everyone had a good weekend. Hope you have a good rest of your day, and I hope you join us again on Tuesday.